Hey, I'm Steven and this is Solving the Money Problem. If you're new, welcome. If you're not, welcome back. Yet again, Tesla blew everyone away with their record-breaking Q2 production and delivery numbers. Despite global chip shortages, supply chain issues, and practically no production whatsoever of Model S and X due to their refresh, Tesla absolutely crushed it, producing and delivering a record number of vehicles, over 200,000, setting the tone for a phenomenal second half of the year and a huge decade. By now, investors shouldn't be surprised when Tesla blows expectations away. They've been doing it quarter after quarter, and they'll keep doing it quarter after quarter. Yet still, I suspect many stock investors, and most on Wall Street, are still dramatically underestimating what's in store from Tesla in Q2 and the rest of 2021. So in this video, I'll share my predictions and what to look out for. I'll talk about what it means for Tesla's Q2 earnings, profitability, potential impact on Tesla's stock price, and more. If you own or are interested in Tesla stock, stick around. If you love crypto, stocks, and free stuff, or just want to help out the channel, check out these great offers. BlockFi are launching the world's first Bitcoin rewards credit card. People in the US can earn 1.5% Bitcoin back on every purchase with no annual fee using the BlockFi Bitcoin rewards credit card. Check out the link in the description. And for a limited time, you can get up to $250 in crypto bonuses when funding a new account on BlockFi, where you can use cryptocurrency to earn interest, borrow cash, and buy or sell crypto. If you want your free crypto, use the link in the description. And if you'd like up to 2 free stocks, check out the link in the description to WeBull. If you open a new account, you'll get 1 free stock valued up to $300 just for opening an account. And if you make an initial deposit of $5 or more, you'll get a second free stock valued up to $2,000. Seriously. Free stocks? Yes, please. And finally, if you're in Australia, the UK, or New Zealand, you can get a free stock with stake, also linked in the description. Thanks so much for your support, guys. Let's get back to it. Tesla's record Q2 production and delivery numbers are not to be taken lightly, putting the company at an annualized rate of well over 800,000 units. This, despite almost no production of Model S and X included in these numbers. People are starting to cotton on to the fact that Tesla is continually and substantially growing deliveries every quarter, but I don't think most investors see what's coming in the financials. Huge numbers, high margins, fat profits, ultra lean capex, surprisingly low R&D spending, and early signs of Tesla's incredible operating leverage. Q2 2021 is going to be the first taste of what will be an enormous increase in profitability for Tesla, and it only gets better from here. Bitcoin impairment. Sure to generate some buzz in the mainstream finance media is Tesla's one-off Bitcoin impairment. Most of you will know the deal here, but the short version is this. Due to some accounting wizardry, if the price of Bitcoin falls below the cost Tesla purchased it at, which we don't know exactly, but is somewhere in the low 30,000s, at any time during the quarter, this shows up as a loss on Tesla's financials. That's right, Tesla doesn't need to have sold any Bitcoin for this to happen. The price just needs to fall below what they paid. This is exactly what happened in Q2. Expect a quote loss of anywhere from around 50 million to 100 million to show up and cause some discussion. This is of course just noise, but I'm sure there will be a lot of huffing and puffing about this non-event, so expect some Tesla Bitcoin loss headlines to follow. Exponentially growing production. Incredibly, Tesla has managed to maintain a relatively steady share of the global electric vehicle market of close to 20% and close to 80% of the US electric vehicle market. This is truly insane and cannot possibly last much longer because math. But Tesla is doing their damnedest to defy the odds by massively scaling up production. As long as Tesla can manage to ramp production at least as fast as the global EV market grows, they're a shot at holding onto these absurd slices of EV market share. The one thing I care about more than anything else is Tesla's production growth quarter over quarter, but more importantly, year over year, and most importantly, the trend. And this is a great opportunity to admit that I have been too bullish for my 2021 estimates. In 2020, I was confident Tesla would hit 1 million vehicles produced and delivered in 2021. I now rate that at a less than 10% chance. Why? 3 factors. 1. Almost 0 Model S and X were produced in the first half of 2021, which I was not expecting. And we've just learned that deliveries of the new Model S are currently on hold. 2. The global chip shortage and supply chain issues are still impacting Tesla, meaningfully slowing down their ability to scale production as fast as they otherwise could. 3. Berlin. More on this in a moment. Even so, 900,000 plus is well within reach, and this is what to focus on in Tesla's Q2 earnings report. Expect updates on Tesla's total production capacity at Fremont and Shanghai, and more importantly, updated timing on when the Berlin and Austin factories, currently under construction, will be complete and begin production. Latest rumours suggest Austin will begin production before Berlin. Shout out to the laughable, bureaucratic, red tape encrusted joke that is trying to get anything done in Germany. This means Berlin production could begin as much as 6 months later than initially planned per Tesla's aggressive timeline. At present, it looks like Austin production will begin late in 2021 and Berlin in early 2022. This, despite the Berlin factory commencing construction in early 2020 and Austin a whopping 6 months later. Germany should be embarrassed, not gonna lie. Either way, by the end of this year, unless there's a disaster, Tesla will be delivering vehicles produced in Fremont, Shanghai and Austin, and I don't believe the stock market is expecting this. What Tesla tells us on their earnings call about current and future production capacity matters. A lot. More than anything, actually. And I suspect the stock market will react very positively, at least if investors actually believe what Tesla says they plan to do. Any increase around delivery guidance for the full year or updates on when Berlin and Austin will begin production are likely to be way ahead of Wall Street's expectations, even if they're behind the expectations of some Tesla bulls. And that bodes well for Tesla stock. The stock market never believed Tesla will produce any vehicles outside the US or China in 2021, printing money and expanding markets. A few quarters ago, we learned that Tesla's Model Y, despite selling for thousands of dollars more than the Model 3, was actually cheaper to manufacture despite being 10% bigger, thanks to boundless innovation, refinement, simplification, and improvements in manufacturing processes, including the octavalve heat pump and gigantic gigacasting. This means fat profit margins and, as Tesla has shown, the ability to continually cut prices over time, if they choose to. Since then, Tesla has integrated those same improvements in the Model 3, which means higher margins on those too. We'll see the effects of these margin improvements this quarter. But wait, there's more. Tesla has continually adjusted prices of its vehicles throughout Q2, generally up. In fact, some versions of the Model Y cost $4,000 more than they did just a few months ago. Yet Tesla continues to find new ways to do more with less. Let that sink in. Tesla is making its vehicles for less and selling them for more. Translation, even healthier margins, aka profits. I suspect that Tesla is ultimately aiming to maintain margins of around 30% on its vehicles while driving prices into the ground and dramatically expanding its addressable market. So keep an eye on Tesla's gross automotive margins as they march steadily toward 30%. Production and deliveries. Tesla produced 206,420-ish vehicles and delivered 201,250 in Q2 2021. Both records despite including just 1,809 total Model S and X deliveries. It doesn't take a genius to realize what this means, but let me state it explicitly. Tesla will post near or record revenue, profitability, and free cash flow as a result. It's not complicated. Sell more Teslas, make more money. Cash on hand and profitability. Tesla has officially become a money printing machine, but don't tell the nihilistic Tesla Q virgins who still insist that they can't make a profit despite mountains of evidence to the contrary. The lingering aftertaste of years of anti-Tesla FUD still has some stock investors under the false assumption that it's uncertain whether Tesla will consistently post quarterly profits as they grow. They will. Whether they'll need to raise capital again, they won't. They really won't. They have close to $20 billion in cash and Bitcoin, also known as a metric shit ton, and this war chest is only going to grow as Tesla's operating leverage comes into play. Consider this. In Q1 2019, Tesla had just $2.2 billion of cash on hand. Tesla has almost 10x this amount in the span of just over 2 years, while simultaneously building a handful of factories, doing R&D on a handful of new products, massively expanding its existing capacity, investing heavily in new equipment like the world's largest casting machines, yes, machines, not one, many of them, hiring the world's best engineers, building a fucking supercomputer, and reinventing the battery cell. Tesla today is, dare I say it, financially bulletproof. They will never again need to go to market to raise capital, unless to take advantage of a truly extraordinary opportunity, not out of a need for survival. Tesla will never again post a quarterly loss, unless the result of the extremely aggressive pursuit of an opportunity that will ultimately pay off down the track 100 times over. Tesla can survive a handful of 2020s and everything short of an extinction level event. Tesla's biggest challenge now is spending the money. I mean, really, with two enormous factories currently under construction, Austin and Berlin, continued expansion at Shanghai, and improvements at Fremont, it's hard to see how Tesla could be moving any faster. There's only so many great engineers out there. As I said a few quarters ago, moving forward, Tesla's biggest challenge may be avoiding the accumulation of excess cash. Tesla's insane capex efficiency means even if they begin construction of 4 new factories tomorrow, they'll still have more money than they know what to do with. Tough problem to have. Full self-driving and other software revenue. As Tesla creeps incrementally closer to solving fully autonomous driving and releasing new features to the fleet, including the epic and ever-improving FSD beta, which is now running on pure vision, they incrementally recognize more revenue on prior sales of the FSD package. No doubt the take rate on the now $10,000 full self-driving package, which has been steadily increasing in price for 2 years, continues to increase in line with its functionality. This package, being software, is almost pure profit. So too the over-the-air upgrades like acceleration increases, heated seats, and so on. Tesla began offering FSD subscriptions in Q3, so this won't impact Q2 financials, but it will be fascinating should Tesla provide an update on the take rates and interest of the subscription. Tesla's software revenue over time will utterly transform the company. As analysts recognize this, expect price target upgrades. Zero emission vehicle credits. As I've mentioned previously, every single vehicle Tesla produces gives off a waste product that Tesla can't use, but other companies will pay big bucks for. Zero emission vehicle credits. I'm not even kidding when I say other automakers are paying Tesla hundreds of millions, in some cases billions of dollars, to buy these waste products. Tesla doesn't need them to avoid fines because they only make emission-free vehicles. Other automakers, however, are struggling to make enough electric vehicles to avoid enormous fines, and so they're buying these ZEV credits from Tesla. Yes, Tesla's competition is literally paying for Tesla to build gigafactories. It's embarrassing, but true. Every quarter, Tesla bears claim these credits are one-off and will vanish next quarter, yet every quarter they continue to roll in to the tune of hundreds of millions of dollars. At some point, the ZEV credits will go away, but by that stage, Tesla will be selling many millions of EVs per year and making huge profits on every single one of them. ZEV credits are literally free money, and until legacy automakers can get their shit together, which is a big ask, expect Tesla to continue to make hundreds of millions of pure margin revenue selling ZEV credits to competitors every quarter. What a strange simulation we live in. Energy products. We recently learned that Tesla's demand for battery storage products is insane and far in excess of what Tesla can actually meet. Fancy that. Tesla is production constrained on vehicles and storage products. This is a great problem to have and shows that battery deployments will continue to grow in line with cell production, Tesla's limiting factor. This also indicates Tesla is in a position of power, easily able to hike prices for better margins should they desire. This is a great lever to have. Given the lumpy and unpredictable nature of storage, one project alone could be 10, 100, maybe even 1,000 times bigger than average. It's hard to know what to expect for Q2, but it's only a matter of time before an inevitable explosion in growth. It seems every other day a new big battery project is announced, and Tesla's now beginning to deploy its virtual power plant technology globally, another potentially huge revenue stream. Storage deployments are one area to keep a very close eye on, as this part of Tesla's business is tiny today, but it will be colossal tomorrow. Regular viewers will know that Tesla is going after a multi-trillion-dollar opportunity in energy, and the stock market is totally asleep to this. One huge quarter and this could all change. China. Tesla's Shanghai factory continues to expand rapidly, producing tens of thousands of vehicles per month. Model Y continues to ramp like crazy and sell like hotcakes. Tesla have been so successful in ramping Model 3 and Model Y that they're now exporting both vehicles to other regions, which has allowed for massive price cuts in regions like my home country, Australia. With lower parts and labor costs, expect China production to continue to drive Tesla's growth and profitability moving forward. Guidance and analyst revisions. Let's be honest, Wall Street is a little slow, especially when it comes to Tesla. Tesla continues to surprise to the upside with production, deliveries, and financials, and Wall Street continues to underestimate the company. In Q1, the Wall Street consensus was that Tesla would deliver around 830,000 vehicles in 2021. This figure has now crept up to around 860,000. In the wake of Tesla's Q2 earnings, expect a wave of endless revisions to Tesla stock price targets and 2021 full-year delivery estimates. This could put upward pressure on Tesla's stock price as investors realize that even the so-called experts have underestimated Tesla yet again. Conclusion: Q2 2021 will be a huge record-breaking quarter for Tesla on everything that matters. And the best part? Q2 2021 will pale in comparison to Q3, and Q3 will be crushed by Q4. It only gets better from here. Tesla is growing rapidly, becoming more efficient, driving costs down, increasing margins, expanding their global footprint, embarrassing everyone trying to compete, keyword there, trying, running circles around legacy automakers, gaining massive market share, banking billions, expanding while others contract, and doing nothing but a whole lot of winning. I've said it before and I'll say it again. We're currently witnessing the end of the ice age at the hands of Tesla. And finally, Wall Street is starting to recognize what's been obvious to others for some time. Tesla has won the decade. It's now just a matter of watching this play out. For Tesla stock, this quarter isn't about you and I, the retail investor. We already know Tesla has won. That's why we've been loading up on Tesla stock. Instead, this quarter is about the dinosaurs on Wall Street waking up to what we retail investors already know. And as they do, expect a steady stream of delivery and price target upgrades, which are likely to put upward pressure on Tesla stock as the wider market, the folks who previously bought the FUD, begin to see what's before their very eyes. Time to whip out your crystal balls. Let me know in the comments below. How do you guys think Tesla stock will react to the Q2 financials? How much will it move up or down, if at all? I'm Stephen Mark Ryan. This is Solving the Money Problem, and I love you all. And don't forget the BlockFi Bitcoin Rewards credit card where you can earn 1.5% Bitcoin back on every purchase. There's a link in the description. You can also earn up to $250 in crypto bonuses when funding a new account on BlockFi, also linked below. And finally, don't forget your free stocks with WeBull and Stake, also linked in the description. These great offers also help out the channel. Thanks so much for watching. Let me know your thoughts in the comments below. And of course, if you have any ideas for future videos, let me know. I read all your comments. P.S. If you're still watching, you're awesome. If you'd like early access, exclusive videos, regular Q&As, our private Discord server and more, consider supporting the channel at patreon.com/solvingthemoneyproblem so I can keep creating content for you guys. There's a link in the description. You can now also become a member of the channel for some exclusive perks. To learn more, click the join button next to subscribe. And don't forget to check out our merch store. Either way, the best form of support is you being here and watching, so thanks again.